Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments.
All right, let's get into it. This is our look at the U.S. market analysis for Thursday, April 16th, 2026. We're going to walk through the source document to see what moved the markets.
Just so you know, what we're doing here is a direct narration of the source document. No spin, no interpretation, just the information as it was presented.
And, of course, the usual but very important reminder, this is all for informational purposes. It is not investment advice. Investing always comes with significant risk, and what happened in the past is no promise of what will happen in the future.
Okay, so here's the game plan for today. We've got 6 parts. We'll kick things off with the big picture stuff, geopolitics and macro. Then we'll see where retail investors are putting their money. After that, we've got 2 deep dives on ASML and Netflix. Then we'll talk semiconductor strategy for AMD and NVIDIA, and we'll finish up with a market summary and a key warning.
All right, let's jump right into Section 1, Geopolitical and Macro Environment. The big question here is how the market is pricing a shift in the so-called war premium. So what's happening on the geopolitical front? Well, there's a little bit of optimism about the Iran nuclear talks starting up again, but let's not get ahead of ourselves. Officials say a real deal is at least 6 months away. On a more positive note, there's a 10-day ceasefire between Lebanon and Israel, which at least opens a window for some talks. But at the same time, we're seeing some provocative comments from the IRGC, and that's creating what's called an asymmetric threat. Now, what does this mean for energy? Keep your eyes on Brent crude. That $90 mark is what the document calls the capital vote line. If it breaks below that decisively, it could mean that safe haven money is pulling out.
Okay, let's switch gears to some macro data. What you're looking at here are the latest U.S. jobless claims for the week ending April 11th. The table breaks down the numbers for initial and continuing claims, and you can see how they stack up against the previous week and what the market consensus was.
And the real headline number here is the initial jobless claims, 207,000. Wow, that was way below what everyone was expecting. The consensus was 215,000. This really just tells us that the labor market is still incredibly tight.
Next up, Section 2, we're going to talk about retail investor fund flows. Specifically, we're looking at that chase trade sentiment and a little something called gamma reset risk.
So, between April 9th and 15th, retail investors sent a net $600 million into the market. But here's where it gets interesting. A whopping $4.7 billion flooded into index ETFs. And for single stocks, that was $1.9 billion, and it was all about AI and data centers. But here's the big warning from the source. With monthly options expiration coming up on April 17th, we could see a big gamma hedging reset. And what does that mean? It could definitely stir up some volatility.
And if you're wondering exactly where that single stock money went, well, take a look. On the bot list, you had Microsoft pulling in $611 million, Tesla with $517 million, and Meta with $193 million. And what were they selling? Looks like Amazon saw $70 million in outflows, and NVIDIA saw $94 million head for the exits. Okay, on to Section 3, our first deep dive. We're talking about ASML. And right off the bat, the report frames this as a buy and hold play. This is not about swing trading.
So the document lays out a pretty clear strategy for building a position, breaking it down into 3 zones. Step 1, the first buy zone, is between 1,300 and 1,394. If it pulls back further, you've got an intermediate zone between 1,217 and 1,281. And then the big one, the long-term strategic zone, which is seen as highly defensive, that's down between 1,000 and 1,090.
And just to really hammer this home, the strategy is super clear. ASML is not for flipping. The report calls it a core buy and hold asset for capital preservation growth. The idea is simple. You build your position slowly, you buy the dips, and you just hold it for the long haul, probably in a retirement account.
All right, let's move on to our next deep dive in Section 4, Netflix. Now, on the surface, their earnings report looked pretty good. But if you dig a little deeper, you start to see some concerns about growth.
So yeah, those Q1 earnings looked strong, but the report points out it was mostly because of a one-time thing. I'll read the quote directly. This was mainly due to the $2.8 billion termination fee. This large non-recurring gain significantly inflated GAAP profitability and masked weak growth. So that one-time payment basically hid some weakness in their main subscription business.
And the report highlights 2 big red flags for the core business. First, their Q2 guidance, it missed on every single key metric. For Netflix,
That is extremely rare. And then, on top of that, you have co-founder Reed Hastings stepping down as board chairman. That's got people worried about who's going to be steering the ship strategically. So if you're watching the stock, there are a couple of key levels to keep on your radar. That $95 to $100 zone is seen as the big dividing line. But if it closes below $87, well, that would flip the technical picture to fully bearish, and you probably see a lot of people heading for the door. Okay, let's get into Section 5 and talk about semiconductor strategy. We're going to put AMD and NVIDIA side by side. The interesting theme here is that while they have similar pricing dynamics, their volatility is a completely different story.
And this really shows you the contrast. You've got AMD, which is described as having a volume-backed breakout. Its market cap is $453.6 billion. Then you have NVIDIA, which is moving at a snail-paced advance. Why? Well, it's being weighed down by its absolutely enormous $4.82 trillion market cap. I mean, that's literally 10 times bigger than AMD. Plus, it has very low implied volatility.
So because so many portfolios are heavily concentrated in the AI sector, the document offers a specific recommendation for managing that risk. It suggests that if AMD stock hits that $300 to $350 range, it might be a good time to think about partially rebalancing, basically taking some profits to reduce your overall exposure to AI.
And that brings us to our final section, number 6, the market summary and warning. Really, this is all about managing our expectations, especially after the kind of run we've just seen.
Look at that number, 12. What is that? That is 12 consecutive days of gains for the NASDAQ 100. A streak like that is pretty extreme. We haven't seen anything like it since 2017. It's just a stark reminder of how overheated this market has become.
So, we'll leave you with the chief risk warning from the document. It's a simple but crucial piece of advice for a market like this. It says, be alert to position resets after overheated sentiment. Continue tracking data updates and dynamically adjust position sizing. In other words, stay on your toes. This is a time for caution and being ready to adapt as new information comes in.